chat by accident. That's calm. I closed the chat by accident. I'm wondering why the fuck I don't get messages. Yeah. Yeah. Did you think something very important? I noticed with the MSG3 price, it always gives a retest to the middle or low risk zone. So I always wait for this to happen. Sometimes it doesn't. Yes. And when it doesn't, you didn't get a setup, right? Then you go on to the next one. So you didn't get your trade for that session. That's perfect. That's what you guys must do. If you decide your entry is in the medium risk zone and price doesn't get here, price just continues to go up, it just left you behind. But you just wait for the next one. It's a lot safer and a lot more profitable in the long run. And you keep on with your zones. Okay. If yours is in the low risk area, you wait for it in low risk. If it doesn't get to low risk, it missed you. It's not meant for you, that trade. Guys, let this thing play out. They're asking me to switch. They're going to switch off the internet and stuff. Let me go. Let me sort out this internet and stuff. We'll take that $114 over to tomorrow. Let me get this internet and stuff sorted out, and so I can go live in the mornings. So we'll add this $116 profit to tomorrow's. Okay. Then I'll see you guys tomorrow. Be safe if you took the entry in the medium risk zone over here. Stop loss probably just below this week over here. But yeah, be careful and yeah, don't risk too much.
I'm exploring the fascinating world of plants, from the most bizarre to the most beautiful. I will be using today's latest technology to reveal a whole new dimension in the lives of plants. I'll trace them from their beginnings on land to their vital place in nature today. And discover a hidden world that only too often we overlook. We will move from our timescale to theirs. Explore the extraordinary ways by which some plants survive in the harshest conditions. And we will do all this in one unique place, a microcosm of the whole plant world. The Royal Botanic Gardens at Kew. I've seen plants growing in their natural habitats all over the world. But here in Kew, it's possible to examine them in a way that is impossible in the wild. Here, some 90% of all known plant species are represented in one form or another. So in this one place, you can survey the entire plant kingdom. And what is more, using 3D cameras, reveal some of its most intimate secrets. Plants flourish most dramatically in places where there is a lot of warmth and a lot of water, the wet zone. So here we can discover how plants first established themselves on land to become the very foundation of all terrestrial life. Rainforests occupy only about 2% of the world's land surface, but they contain over 50% of the world's species. And many of these wet zone plants have extraordinary survival strategies, and to study them, Kew has built a rainforest here on the banks of the Thames. This is a rainforest like no other. The palm house was constructed in 1844 from over 200 tons of iron and 16,000 panes of glass. No one had ever built a glass house on this scale before, and to do so the architects borrowed techniques from the shipbuilding industry, which may explain why the palm house looks like the upturned hull of a ship. Its purpose was to provide a home for the tropical plants that Victorian explorers brought back from their adventures in the tropics. It was an engineering wonder of the age. And it is still a botanical wonder. Most of the plants at this end of the house are kept in pots, as they would have been in Victorian times. And this is almost certainly the oldest pot plant in the world. This is Encephalatos altensteinii, and it came here in 1775. Altensteinii has since been joined by a multitude of other wet zone plants. Together, they constitute a unique global rainforest, a living laboratory where we can watch and observe the fascinating ways in which rainforest plants interact and behave. Conditions in this glasshouse are near perfect for wet zone plants. It's warm, it's humid, there's plenty of light, and as a consequence, plants grow very rapidly and all through the year. If you speed up time, plants begin to reveal their true nature. They're not passive organisms.
These are both up about 4.5%, 5% today. So both rideshare firms and NVIDIA announced separate autonomous vehicle partnerships. So Uber is launching a fleet of NVIDIA software-driven autonomous vehicles. This is by 2028. And then on Lyft's side, they are using NVIDIA's AI to sort of enhance its own machine learning systems across global operations. So both of them getting a little bit of a shine there from NVIDIA partnerships.
All right, very good. We appreciate that. Carmen Reinecke giving us some of the movers and shakers. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, anywhere you listen. Let's get the latest reporting out of a very, very fluid situation in the Middle East. We're joined by Will Kennedy, Bloomberg News Director for Europe, Middle East, and Africa. Will, what's the latest here? It's all about, it seems like the focus is now really focusing on the Gulf of Hormuz. What's the latest?
Yes, that is the biggest issue in energy markets, as it has been for several weeks, that most oil and oil products that are made inside the Persian Gulf cannot transit those narrow Strait of Hormuz waterway that separates the Persian Gulf from the Indian Ocean. And that's depriving oil markets of perhaps 10% of global production. And the strains are increasingly showing, not only in oil markets where we see benchmark Brent trade above $100 a barrel still, but also, I think, importantly, in the markets for refined fuel, that's jet fuel, diesel, gasoline, etc. This morning, the gasoline price in the United States crossed $5 a gallon for the first time since 2022. That's going to add to costs for the trucking industry, for America's farmers. We're seeing gasoline prices about to hit $4 a gallon nationally, perhaps $6 in California. Again, that will hurt ordinary Americans in their pockets, and that's being repeated around the world where people are flying, driving, and using fuel to cook and heat their homes.
As much as we say that the Strait of Hormuz is basically at a standstill, there are some tankers that are allowed to go through. What do we know about what's allowed to go through, what Iran is allowing to go through?
Well, I don't think we should overstate it, Scarlett. There are a few. It is very much a trickle. We're counting them in ones, and typically many
Fair
tens
enough.
of ships would transit every day. But what is interesting is that those ships that are going through are cleaving very close to the Iranian coastline. And they are also coming from countries, India and Pakistan, for example, which claim to have negotiated safe passage with the Iranian government. And I think what we take from that is the possibility that Iran is asserting a measure of control about exactly who goes through and who doesn't. And that's incredibly important for thinking about how this crisis resolves itself. As long as Iran is making those decisions, it has a stranglehold on exactly what energy sources makes it into the international market and where it goes. And that's a situation that's going to be intolerable to the US.
So, with a little bit of hindsight here, Will, was it a mistake by the US and Israel not to secure the Strait of Hormuz as a primary objective here?
Well, securing the Strait of Hormuz is no easy military task. I'm not a military expert, but this is a narrow waterway, just 20 miles or so wide at its most narrow point. One side of it is Iranian coastline. The only way to truly secure it would be to control that coastline.
Right.
As long as you don't have that coastline, Iran is able to interfere with shipping using pretty low-tech means like speedboats, small craft, to attack and harass shipping. And it is a very difficult thing to control. So there are no easy military options here. And I think most analysts who understand the situation in the Middle East would have been able to say beforehand that this was a risk of large-scale military action against Iran.
I also want to ask about this headline that Israel has said it's killed Iran's security chief in an overnight attack. It raises the question of whether Israel and the U.S. have different goals in the ongoing conflict.
Well, I don't know if this does show any space between Washington and Israel, but it does demonstrate that the aggressive targeting of the Iranian leadership continues, especially on the Israeli side. Larijani was a very prominent member in the regime, especially after the killing of many of Iran's leaders at the very start of this war. He had emerged as the key power broker, perhaps inside Tehran. We don't exactly know the status of the new supreme leader, Mojtaba Khamenei, and how healthy he is. So Larijani had been visible, had clearly been a leading figure, and now he's gone. And that raises questions about the political process if and when this war ends, both whether there are people inside the regime for the US and Israel or intermediaries to negotiate with, and second, who will be in charge of Iran and set its direction once this conflict is over, and indeed during the remainder of this conflict.
Will, thanks so much for joining us. Appreciate your reporting as always. Will Kennedy, he's the news director for Europe, Middle East, and Africa for Bloomberg News. He is based in London. Red headline crossing the Bloomberg terminal here. EU to restart process to ratify U.S. trade deal after block. So we'll have more reporting on that, but that is potentially a good economic sign.
Potentially, the EU Parliament Trade Committee will be holding a vote on Thursday on the U.S. deal. So they're still a few days away, and things take a long time in Brussels. So they're getting the process restarted at this point.
Right, and that's good news here. I think what we haven't seen is really any reporting of any meaningful peace talks or truce talks here as it relates to Iran. There have been reports of one side reaching, Iran maybe reaching out at one point, but no, nothing seeming substantive.
Well, there are claims on the U.S.'s side and then denials on the Iranian side. So we'll see how it all shapes up today on, I believe it's day 18 of the conflict in Iran.
Absolutely. And we've got some green on the screen here for St. Patrick's Day. S&P up 28 points, 0.4%. The Dow and the NASDAQ also about 0.4%. WTI crude oil up about 2%, $95 per barrel. We'll have more coming up this week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're higher right now. The major averages, S&P 500 up 36 points, up 0.6%, 6736. The Dow Jones Industrial Edge up 210 points. The Nasdaq 100 right now up 173 points. That's a rise of 0.7%. Brent crude, the international benchmark, 1.8% higher, right at 102 a barrel. WTI West Texas up 1.7%. That's at 95.08. So for the second day in a row, the S&P 500 is higher. In the background, the policy meetings. 18 central banks are meeting this week, including the Fed. That's underway today in Washington, and the European Central Bank with the biggest shock to the oil supply in history. Investors will also be looking for any financial policy responses. Delta Airlines shares, they're rising. The airline now says it expects high single-digit revenue growth for the first quarter, up from its previous forecast. And it's also interesting, the CEO in an interview said it was a $400 million fuel spike for the month of March. Delta shares right now up 3.5%. And the airline's also holding on hope for some sort of agreement here. There was news earlier that the White House received a counteroffer from Democrats late last night on funding the Department of Homeland Security. That's a report from NBC. You went through the airport, but you didn't experience any big delays.
Either way.
Do you have TSA pre-check?
Yes, and I have clear and all that kind of
So
stuff.
you have everything that you could to get past that. But what
Yes.
did the regular line look like?
I don't look at the regular line. That's what I pay the money for. And I have global entry, which
he's
is
honest.
absolutely
I don't
the best.
bother with those people.
The global entry coming in from overseas is worth $1 million to me.
Okay, well, I'll get that next time I fly.
Be like Paul.
Yeah, right. We should be more like Paul. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker, with that Bloomberg Business Flash. Looks like when Paul came back, he brought the good times with him because stocks are now higher for a second day. And this is after a, I believe, 4-day decline. So it feels like the momentum may have shifted. I don't know. We'll see. Margie Patel is with us. She is Senior Portfolio Manager at Allspring Global Investments. And Margie, as the Fed begins its 2-day policy meeting, the big question, of course, which the Fed probably won't answer, but everyone's wondering, is if oil prices stay elevated, what is the spillover effect? What's the knock-on effect for the economy, for how monetary policy is conducted? How are you thinking through the impact of higher oil prices?
Well, I think on the economy, it'll actually have a very, very modest effect because energy is such a small percent of consumer spending now compared to the big energy crisis back in the 70s. I think it's about 1/2 the amount of consumer spending that it was then. So it's around 3% now. So I think it'll be relatively mild. And also back then, the U.S. was a net importer of energy products. Now we're a net exporter of energy products. So in a sense, at least that sector will benefit. I think the Fed's really caught in the bind they've been in, which is economic growth is low. You have the effects of potential this oil shock. But on the other hand, inflation is above their target, close to 3%, far away from their 2% target. Real growth in the last quarter was only a little over 1%. So they're really caught between. If they cut rates, they may stimulate inflation in their mind. If they raise rates, that's certainly not something that we're looking at. That may have a negative effect because of the knock-on effects from energy. So I think the most important thing is that the Fed does nothing. That would be the best thing for the economy, the best thing for consumers and business. And that's what I hope they do rather than be an activist either way.
So Margie, of course, is not the only one who has made the point that the rise in oil prices is something that consumers on the whole feel less than perhaps they did 50 years ago. However, Paul, psychologically, it is critical because people look at oil prices. I mean, John Tucker quotes the gas prices every day, and they think that this is something that they don't want to spend more on.
Exactly. And the diesel story from yesterday going over $5. That hits, everybody uses a diesel truck, think farmers and that kind of thing. Margie, so if we can, to the extent, look past what's happening in Iran here, how should folks be positioned given what we know about earnings, what we know about interest rates? What's your conversation with your clients like?
Well, I think the equity market still is really quite attractive, especially versus the alternative in risk-free rates. You know, with short-term risk-free rates, say closer to 4%, it looks like corporate profits once again in the fourth quarter were up way over 10%, and probably this year they'll be up, say, 10 to maybe even 14%, assuming the GDP growth is maybe 2%. So pretty modest, and it shows the corporations have the ability to squeeze out the profit margins, pass on price increases, maintain their margins. So that's as a backdrop for equities still looks pretty attractive, especially in those sectors that have growth. Some sectors look pretty stagnant, and I don't think they'll be very productive. But really, when you look at technology, aerospace, defense, industrial companies, companies tied to increasing the electrical grid to support the data centers, I think those areas will all continue. They're on a multi-year upswing, and I don't see there's a sign that that's coming to an end. So I'd say be long, and I think that'll be a good strategy once again this year.
How are you thinking about the credit side of the equation here, especially with the cracks in private credit, a lot of concerns, some justified, some, maybe getting ahead of themselves, that the credit market is, nearing something that could precipice a bigger crunch?
People say that, but I really don't see it again coming back to the Fed. The Fed, whatever the Fed does, they are not going to suddenly tell banks don't make risky loans and try to pull in that way. And really, I think the credit market, there's two parts. The public credit market is actually in great shape. If you look at U.S. high yield bonds publicly issued, their default rate is only around 2%. It's when you look at the private side that you see default rates up around 5%. And I think really the market has felt lately as if we're having a credit squeeze by the Fed. And I think it's really all the tightening and the risk to take off that we're seeing on that private credit side, pop-up defaults that people weren't expecting, slowdown in sectors like software that credit investors maybe weren't looking for. So it's really, I see it really two worlds: public market in great shape, low defaults, private credit, that's where we're going to see all the pain and all the damage.
Margie, thanks so much for joining us. Really appreciate it. As always, Margie Patel, Senior Portfolio Manager, Allspring Global Investments, so located up there in Boston. Let's switch to the airline industry. We heard from Delta Airlines today. They gave a better than expected forecast, and that's despite saying, hey, they took a $400 million of increased fuel charge in the month of March, reflecting what's going on in the world. So let's check in with somebody who follows this stuff. Sid Phillip, Bloomberg Chief Correspondent for Global Aviation, joins us here. What did we learn from Delta today, Sid?
Morning, Paul. So Delta Airlines is talking about how they've managed to raise their ticket prices, and that sort of helped them offset the increase in jet fuel prices. I mean, we've seen jet fuel prices soar almost more than double since the war in Iran began, and that's really the biggest chunk of costs for airlines. And what airlines are talking about is saying that they've managed to pass on those cost increases to the customers in the form of higher ticket prices, and that's really helped them sort of continue to weather the crisis and be able to sort of manage to ramp up bookings. I mean, Delta talked about how in the last since the war began, they've had 5 of their 10 biggest sale days, and that sort of really shows that consumers are sort of locking in their travel at the moment.
That's great if you have the pricing power like a Delta Airlines, but what if you are a discount carrier that relies on low ticket prices to get your passengers, to get consumers to sign up? I mean, it's a different story, isn't it?
It is, and so Delta Airlines obviously has a predominance of premium heavy travelers, so they sort of talk about how they're targeting businesses and corporate travel, which is sort of continuing to see growth. They're also talking about how premium leisure travelers are continuing to buy tickets. But at the lower end of the spectrum, I mean, the Spirit Airlines and the others, they might see their consumers sort of balk at higher ticket prices, and they may put off those trips. Although we are sort of seeing JetBlue, we heard from JetBlue earlier today, and they talked about how they are also seeing people continuing to book. So it does look like consumers are trying to sort of get ahead of future price increases by locking in travel for the summer and the rest of the year early.
So how about the visibility? What are the airlines saying about the visibility of their bookings? I mean, that's also a metric that I know kind of gives you a sense of how confident they are in their business.
So at the moment, the airlines say the bookings look visibly healthy. At the other end of the spectrum, I mean, they're still talking about how they're not quite sure where jet fuel prices will settle, and that's sort of really key in terms of bookings as well as their jet fuel prices. So that's sort of, those two things go hand in hand and determine how profitable the airlines will be. Because remember, if they're able to sort of pass on higher ticket prices, but jet fuel prices continue to grow higher than those ticket prices, that's when the airlines start feeling the pain, because they're sort of not being able to keep up with their costs. On the other hand, if they can sort of take the higher prices and see costs come down, that'll sort of help them boost their profitability.
So one thing that you and your colleagues point out in your reporting is that U.S. carriers, unlike those in Europe, don't hedge fuel prices. Once upon a time, some of them did, but most of them don't anymore. Why the change, and do you think that because of what we're seeing in Iran, because of what we're seeing with the volatility, the uncertainty around oil prices, that airlines might start to hedge those fuel prices again?
So the airlines have typically not hedged. I mean, famously during COVID, a lot of airlines got stuck with hedges that were sort of in the wrong way, in the wrong direction when jet fuel prices crashed, when demand plummeted. And so at the moment, we haven't yet heard from airlines talking about returning to the hedging policies, but Delta does point out that they own a refinery, and that gives them somewhat of a natural hedge. And essentially, they expect that to help them weather the increase in jet fuel prices.
Hey, Sid, what are the airlines saying about the state of TSA today? We've seen a lot of stories, a lot of video over the last week or so of really long lines at airports. Do they have an opinion on how this might play out?
I mean, the airlines, including the industry groups, the Airlines for America has been talking about how there needs to be a deal that would basically allow TSA staff to get paid and basically start reducing those lines, because essentially the problem is that while it's not a safety of flight issue like the previous shutdown, when the FAA had to sort of cancel flights into 40 airports because of concerns about safety, this time it is sort of affecting the comfort of passengers and causing those long lines we've seen in various airports across the country. And essentially, the airlines have been saying that this will get worse as we get into the peak summer travel season, and so they're hoping for early resolution and a return to somewhat normal as they go into the busy travel peaks.
Yeah, speaking of the busy travel season of the summer, also at this conference, a lot of industry executives were making the point that if the Strait of Hormuz were not secured by Memorial Day, that would be a key time frame in which consumers might start to see ticket prices really go up even more than perhaps they already have.
Exactly. That would sort of that would basically mean that higher fuel prices are here to stay for the slightly longer term, or we're not really sure when those fuel prices will start coming down, and that's when consumers will say, hey, do I really need to take 3 trips? Maybe I can just do with 2, or I can sort of not fly at all this summer.
All right. Sid, good stuff as always. Sid Phillip, Deputy Team Leader for Global Aviation, Bloomberg News, down there in D.C. I can't even conceive, well, I guess I can conceive it, but that would be a real bummer if we're still talking about this in Memorial Day.
I know. I mean, especially with most people in the market talking about how the elevated oil prices are temporary. It's not going to stick around beyond the next couple of weeks.
Yeah, I'm just not sure what gets the two sides to the table to have meaningful discussions. I'm not sure if either side is motivated at this point. The market's up again today after last week's weakness. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start with this. We did get data this morning. Pending sales of U.S. existing used homes, I call them, existing homes, unexpectedly rising in February. For the first time in 3 months, kind of surprised considering the weather. An index of contract signings climbing 1.8%. This is according to the National Association of Realtors. All the major stock indexes, they're up. You have 10 of the 11 major index groups in the S&P 500 are higher. And right now it's being led by energy and industrials, the worst performing group right now. Crude oil is higher, but it has paired some of the earlier gains. Brent is up 1.5%, 101.68. WTI is 94.69. That's up like $1.19 a barrel. Tracy McMillian at Wells Fargo says market performance will depend on the length of the war with Iran.
They can take a spike in oil prices for a short period of time. What they can't take is a prolonged spike in prices that really does start to flow into other consumer prices and into inflation.
Eli Lilly shares, they are down right now, 2.9%. HSBC has turned bearish on the stock for the second time in a year. They say investor expectations for weight loss drugs are overinflated. There was this headline crossing the Bloomberg from Paris. French President Macron speaking there, saying they are ready to work on an escort system for Hormuz when calmer. So, there's that caveat. I don't know. It doesn't look like it's really moving the needle much. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
That sounds highly conditional. When calmer.
Yes. Isn't that the whole point? We need it now because it's not calm?
Yeah.
I don't know.
I don't know how you determine that and by whose standard is it calm enough.
There hasn't been much positive response from allies in terms of the call from the United States to help protect.
Well, you badmouth them, you tariff them, you do all this kind of stuff.
Don't editorialize. I'm just saying.
Okay.
I mean, the thinking from the Trump administration and its friends is that these other countries suffer more, will really feel the pain of higher oil prices. So it's in their interest to then help the U.S. clear the Strait of Hormuz.
Yep, absolutely. We'll see if it plays out that way. Vince Piazza joins us here. Why? Because he is our senior equity research analyst covering all things oil and gas. And boy, that is the front and center story here for Global Wall Street. He does that for Bloomberg Intelligence. Hey, Vince, talk to us about kind of how you think this is playing out here. It seems like obviously there's a constraint in supply. Now there's a tax on various oil facilities in the region here. How do you think this plays out?
So let's use 2022 Russia-Ukraine as the analog. In February 2022, you saw that spike. It peaked at, call it around 120 in March of that year, and we retraced shortly thereafter, right around April. Now, granted, you have a prolonged conflict there, and the market has become more accustomed to those types of flashpoints. Will that be the same here? I'm not sure, only because it is a much more volatile and key maritime logistics region. So if anything, what will end up happening, how this all plays out, is a reordering of future supply chains as shippers, buyers, sellers try and move away from or bypass or divert as much capacity as possible from that part of the world, from that particular choke point. Now, granted, you're not going to get rid of everything from that choke point, but there are avenues that folks will probably take, shippers will probably take, to remove some of that volatility, remove some of that geopolitical linchpin.
Right. I'm glad you made the comparison to 2022. I've read that quite a bit, but as you point out, we have a Strait of Hormuz issue here that we didn't have back then. Let's talk about diesel prices. They're now above $5 a gallon here in the U.S. Yeah. And one of the reasons why we've seen a price increase in diesel faster than other fuel products is because Persian Gulf refineries are the major suppliers of diesel. Walk us through how this all works.
Yeah, so diesel is the workhorse. It's the workhorse fuel. It's in pretty much everything. It is in the industrial sector. It's in the transportation sector. So trucks, locomotives. It's in the agricultural sector. So it's extremely important. Everything across the economic value chain depends on it. So when you think about the volatility, when you think about the delta, for every dollar increase at the benchmark level, so crude, WTI, Brent, during times of volatility, you could consider somewhere between 4 and 5 cents per gallon increase with that $1 increase at the benchmark level. So you are seeing more volatility there because how intertwined that middle distillate is in the broader economy relative to gasoline or on-road transportation for us here in the U.S. as well.
Hey, Vince, I understand there's also, in terms of trying to mitigate the Strait of Hormuz risk there is a pipeline to the Red Sea, and this, I guess, some can be diverted there. Is there now talk that let's build like 3 or 4 more of those things to really de-risk the strait?
So when we consider longer term alternatives, Paul, we're looking at very far down the road, right? 5, 7 years, 10 years of attempting to reorder these supply chains to move away from those traditional maritime logistics. But what you end up doing is you end up adding time and dollars to that new reordering of supply chains and maritime logistics. So what you possibly will end up having is down the road a lifting of those break-even levels across the globe when you consider moving away from these geopolitical hotspots, but also lengthening voyage times, moving molecules from one spot, the seller spot, to the buyer spot.
What does the increase in oil prices right now, and again, we don't know how long this will last or mean for the ExxonMobils, the Chevrons of the world. How does this factor into how investors should think about their earnings prospects?
So when you think about the sector overall, it's obviously a modest tailwind right now. For the Exxons and the Chevrons, obviously the upstream side sees more revenue because of a higher price for what they extract, but also on the downstream side, that is a feed cost, to their processes further downstream. So there's not a solid win-win, but for the upstream guys that I cover here in the U.S., for the Diamondbacks in the Permian and the Eagle Ford, obviously higher netbacks, higher free cash flow. Most likely investors seeing that cash flow come back to them in the form of supplemental dividends, incremental buybacks as well, as if this moves farther down the road into the second half of the year as well.
Hey, Vince, as I understand it, the cost of production in the U.S. is roughly $50, $55 a barrel. Boy, am I incented now to go drill a hole in the ground. Are we seeing any of that?
Well, we haven't seen it yet. Again, if you look at the curve itself, you're seeing the response, the volatility on the shorter end of the curve. So unless we see the entire curve move up, move higher toward the second half of the year, you could see some incremental barrels coming back into the market. But what the investor base have told the operators is, I want you to control that capital. I want you to control that production. I want to see the excess cash coming back to me in the form of buybacks and dividends. I don't want you to go back to that level of Shale 1.0 when you were growing without any regard to returns on capital.
All right, good stuff. Vince, thank you so much for joining us. Vincent Piazza, Senior Equity Research Analyst covering oil and gas here at Bloomberg Intelligence. Paul, I know everything you know about oil is from Landman.
Yeah.
How would Landman treat what's going on right now? Would they fold this into their storyline?
They could maybe. I mean, they try to be pretty
Current.
constant, but I think one of the things is $100 oil. They don't necessarily like that because that translates into really expensive gas, and that's when people get upset. So they like, $75 is kind of what
That's their sweet spot.
That's their sweet spot here. ExxonMobil stock hitting a 52-week high today, up 32% year to date. Super good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some other company news here today. Our friends at Kraft Heinz, they were going to split up, right?
Yeah.
But now I think
they called it off.
Yeah, they called it off. They have a new CEO, and I think he feels like can invest in some of these brands and drive growth that way, which is a different strategy than what we've seen from some other consumer products companies. Because let's face it, they're under pressure here. I think a lot of people like me are trading down some of the store brand,
the private label brands.
Private label brands. That's putting pressure on some of those brands that they've spent generations trying to create these brand values through advertising and other ways. Christina Peterson joins us, food industry reporter for Bloomberg News. Christina, talk to us about what's going on at Kraft Heinz. What's the latest news there?
Yeah, as you guys mentioned, they halted their plans to split. Their new CEO, Steve Kaling, is trying a new tactic by investing $600 million in their research and development, their marketing, lowering some of their prices. And as part of that effort to restore growth in the company, they are unveiling some new, healthier products in some of the brands that have really struggled, but are showing some signs of growth. So we are going to be able to purchase a higher protein version of Kraft mac and cheese later this month. And then in April, they are unveiling a Capri Sun lower sugar hydration beverage and a snack size version of Lunchables. So these are some of the brands that Kraft Heinz has been weighed down by, but when they're investing some money, they've seen a little bit of growth coming into those brands.
Okay, adding protein makes sense given the shift among consumers towards more protein-packed foods, but isn't the bigger shift about people wanting to avoid food that is seen as perhaps not as healthy as fresh food? I mean, we're still talking about packaged goods, right?
Yeah, I mean, I think that is the sort of inherent risk here. I asked the CEO about this, and he said he thinks people are leaving the center aisles of the store where you buy packaged food because they want better for you options. And that as a packaged food company, what they can do is try and do better for you through a shorter ingredient list, what food companies call clean labels, by adding more of these kind of trendy macronutrients, leaning into protein, leaning into fiber. But you're right, no one's going to confuse this for kale. So they're betting that there are times when convenience and taste will win over consumers.
That's the only thing that drives me. I don't know what they're talking about here, but I understand.
You're all kale all the time.
Oh yeah, exactly. Christina, what's the specifically for Kraft Heinz? I mean, other companies in the packaged goods industries have pursued separation plans. Is there a sense within the industry whether that's a good strategy, not a good strategy? Maybe Kraft Heinz thinks they can be a little bit smarter about it.
I think that there was a general agreement that splitting Kraft Heinz into two separate companies at that moment in time did not actually make a lot of sense because both halves were seen as somewhat weak. If you had one company that was doing really well and one half of the company that was struggling, then you could siphon that off and protect the stronger half. But in this instance, I think people thought it did make sense to pump the brakes on that and see if you could restore growth in at least part of the company before splitting them apart. So even if, Oscar Mayer meats or Maxwell House coffee can't be restored, maybe some of the other parts of the business can be. And then if they were to pursue a sale down the road or a split down the road, that would make more sense. So just trying to bring the company back to life before you auction it off.
Well, you mentioned a couple of brands there, mac and cheese being something that Kraft Heinz is willing to invest in. The Lunchables brand is also something that they're kind of beefing up, and Capri Sun as well, which I think we all remember from packing our kids' lunchboxes and having them ourselves. But also the other brands within its portfolio, including Maxwell House Coffee and Oscar Mayer deli meats, those are things that, has the company largely given up on it? I mean, if they're not going to refresh those, does that mean that they are for sale for sure?
They have said that they will invest in order to protect their market share, but they are not, as far as we know now, sinking a lot of resources in to get new consumers there to grow their market share. The CEO has said that he would not rule anything out in terms of a sale or a divestment, and they are reviewing the portfolio kind of broadly speaking to see what works and what isn't working. He said they're not actively engaged in looking for buyers for those brands, but that they would not rule anything out.
What's the market's feedback on this new CEO? Or is it too soon to really hear anything?
Well, it's a tricky time. Shares of Kraft Heinz have been down since the split was paused, but it's also been a tough time for the food industry just in general. Consumers are strapped. The conflict in the Middle East has sent oil prices rising. There are concerns that will stress already strapped consumers out further. In general, the large food companies have been selling less food. So there is just concern broadly in the market. So I think people are willing to give Steve Kaling a shot. And in general, he is thought highly of. He presided over the split of Kellogg. So I think there was initially an expectation that he would do the same with Kraft Heinz. I think people are interested to see if his gamble works, but there is some skepticism that these are the brands that will be able to be perceived as better for you. That seems a little, maybe a little bit of a lift,
All
a
right.
little bit of a reach.
Yep, the stock up a little bit today, but down on a year-to-date basis. Christina Peterson, food industry reporter for Bloomberg News. We appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good morning. This is Bloomberg Intelligence with Paul Sweeney, John Tucker, and Scarlett Fu. We are live from our Bloomberg Interactive Broker Studio in Midtown Manhattan, and we are also streaming live on YouTube. We've got a lot coming up in this second hour of Bloomberg Intelligence. The markets are higher for a second day. We're going to check in with Catherine Chiglinski on some company news because MasterCard is buying a stablecoin startup bank, BVNK, out of the UK for up to $1.8 billion. And of course, oil prices are top of mind with diesel now topping $5 a gallon. So Lee Klaskow, our senior transport logistics and shipping analyst, will join us to discuss how these rising diesel prices are impacting freight demand. In addition, Grace Lee, senior portfolio manager for Columbia Threadneedle, will join us to give us her outlook for the markets as the Federal Reserve Open Market Committee begins its meeting on interest rates. They will come out with their announcement tomorrow at 2 p.m. Mandeep Singh, our global tech research head, will give us his take on the NVIDIA annual conference taking place right now, GTC. It has happened, and it's certainly, at least it moved the stock price yesterday. And finally, we'll check in with Jeffrey Langbaum. He is our senior U.S. REIT analyst on real estate, especially when it comes to office space. First, though, John will give us a Bloomberg Business Flash. Hey, John.
And we're green on the screen. How appropriate. S&P 500 up 40 points. That's up 0.6%, 67.39 at the index. The Dow Jones Industrial Average right now up 243 points, up 0.5%. And the Nasdaq 100 up 192 points. That's a rise of 0.8%. So we had a rally in oil. It's easing just a bit, so I guess traders are grabbing onto any shred of relief to send stocks higher. Energy, still the best performing major industry group in the S&P 500. And then we have the Fed meeting in Washington that got underway just after 10 o'clock this morning. Tomorrow, we're going to have the interest rate decision. I mean, there's no change expected in the benchmark and also the quarterly projections, the dot plot. Meantime, Julian Emanuel of Evercore ISI says, in the face of war with Iran, markets have actually been pretty resilient.
If we had known that you were going to more than double from the December low in oil to where we got to a week and change ago, and we saw the string of payroll reports that we've seen over the last 6 months, would you have really thought that stocks would only have been down 5%?
Right now, checking Brent crude oil up almost 1%, 101.16. So it is pairing some of the earlier gains. Same thing for WTI is 94.21 a barrel. So that's up 72 cents. Quick look at the travel stocks, broadly higher after we got a relatively bullish forecast from airline operators. For instance, like Delta, they're up 4%. You'd have thought the increase in the fuel costs would have really damaged them, but they seem to defy that, issuing a more optimistic sales target. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Are you going to head out to the St. Patrick's Day parade later?
That's for rookies. I mean, you know, I'm a professional.
Yeah, exactly.
Did that for the first 20 years.
A special day to, you know, do whatever, celebrate.
So that would be a no.
I'll go to
maybe.
I'm going to St. Stephen's Green down the Jersey Shore for a pint. They pour a proper pint there, so I'll be looking forward to
So
that.
someone's celebrating.
No, I celebrate this blessed day every day. My Irish heritage is something to celebrate on a daily basis, Scarlett.
All right, there you go. Thank you. You're not wearing green either, I just noticed.
Hey,
Paul
again,
is.
for rookies.
Paul's in the spirit of things.
Yeah.
All right, let's take a look at some stocks on the move today. Scarlett Fu with Paul Sweeney and John Tucker, and we're joined right now by Bloomberg's Natalia Knežević. Natalia, get us started.
Yeah, let's start with Delta Airlines. The ticker is DAL. Shares are up by almost 4%. The company issued more optimistic sales target for the first quarter. It says bookings by leisure and corporate customers accelerated into March. It now expects high single-digit revenue growth for the first quarter, up from previous forecast between 5 to 7%. Now, the company said it's well positioned to navigate this current environment. As we know, airlines are struggling how to navigate flights around the war zone, higher fuel costs, which represent about 30% of all total operating expenses for U.S. airlines. And now the bad news, guys. So airlines executives are saying that passengers could see higher ticket prices or they will remain elevated if the Strait of Hormuz isn't secured by the Memorial Day.
Well, it better be secured by Memorial Day.
I know. This was not supposed to be something that went on for months on end.
No, that's what the market, I think, is reflecting, like kind of shorter than maybe
Yeah, and you see
longer.
that in oil prices at least a couple months out, the contracts for later on this year. All right, next up.
Yeah, let's talk about Uber and Lyft. Both shares are up today. Companies announced several autonomous vehicle partnerships with NVIDIA. So RBC Capital Markets analysts are saying that Lyft's proposal is focused on companies adopting NVIDIA's accelerating computing capabilities. They want to build new generation of mapping platform. Now, we also know that Uber wants to launch a fleet of NVIDIA software-driven autonomous vehicles across 28 cities globally by 2028. But both stocks are really struggling. We see that Uber is down by about 3% year-to-date. Lyft is down by about 27%. We know that the company posted really disappointing earnings results, and we see still a lot of decelerating growth, especially for Lyft.
All right, how about Eli Lilly?
Eli Lilly, we see that shares are down by 3.4% today. HSBC cut rating to sell from hold. Now this is the only sell rating for the company. So HSBC is basically saying that the total addressable market for obesity drugs and pills can be less than expected. It said also that Novo Nordisk will fight back, which means that less market potentially, right, for Eli Lilly. Interesting. So now this price target from HSBC implies a 16% move to the downside from yesterday's close, considering the fact that the stock is already down by 10% year to date. But other analysts are really, really optimistic. They see the price hovering at above 1,200 by the year end.
All right, very good. Natalia Knežević, we appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. A little M&A trade on the tape here today, Scarlett. MasterCard will acquire the stablecoin infrastructure startup BVNK for as much as $1.8 billion. Have no idea what that is. So I'm going to go to somebody who does. Catherine Chiglinski, U.S. Finance Team Leader for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Catherine, what is MasterCard buying? What is BVNK?
Well, it really does a lot of the stablecoin infrastructure. So I think that's been a huge bet for them, right? Like MasterCard and its rival Visa have long dominated the payment infrastructure world. And this deal with BVNK and MasterCard, I think really just allows MasterCard to actually boost its sort of digital payments operation without actually having to build some of the technology itself, which I think is a real boon for it.
There's also, kind of this strategy that MasterCard has taken over the last few weeks, few months, because earlier this month they launched what they call a global partnership network with a whole bunch of digital asset, crypto-related firms for more collaboration. It sounds like, they're moving in that direction, but I don't know what it really means in terms of what changes for consumers.
Yeah, well, I don't think a ton will change for consumers because, I think MasterCard is still very much wedded to the idea that regular payments are its bread and butter. I do think, though, that they want to be a player in all these different markets, and especially as we see the adoptions of digital currencies increase, I think they want to have at least the back end so that they can handle a lot of that. So I think those partnerships and this BVNK deal really are helping them sort of toggle both ends so that they can get bigger with the growing market and have that technology ready so that as it continues to grow and they can really seize on it.
When I first started learning about fintech, one analyst said, just buy Visa and MasterCard. I mean, no matter what the technology is, it's going to flow on their platforms to some degree. How is that playing out? How are MasterCard and Visa and maybe even Amex, do they feel like they're participating in this transition to financial technology and digital
in many
banking?
ways, yes. I do think that they have been, seeking different ways to get to establish footholds in these markets. In other ways, you are still seeing deals. You're still seeing them buy BVNK. I think there is still room for them to grow. But in the end, yes, will they find a way to sort of have their fingers in all these different markets? I 100% believe so, just because it really is this benefit of, even if most of our markets are still relying on sort of regular payment systems, they want to be intertwined with sort of this digital asset push.
Has MasterCard clarified what its M&A strategy is? I mean, there's partnerships that it's formed with this, network, this global partnership network that it announced, and then there's actual M&A. At what point do they buy something wholesale versus just form a partnership?
Yeah, well, I think there's a careful divide. Obviously, I think a lot has to do with price these days for these assets, especially when you think about how hyped up sort of the digital asset space is. So I assume, like many companies, they're going to be pretty careful about exactly which ones they buy and which ones they partner with. I think some of their partnerships have also been really to expand it widely. And I think, but with BVNK, I think they're getting, specific data infrastructure that's going to help sort of beef up their back end.
Boy, these stock prices performed just about in lockstep. Visa and MasterCard over the trailing 5 years on a compounded annual basis, their stock's up about 7% per year, both of them. But that's lagging the S&P, which has been up about 13%. So a little bit of an issue there, but performing kind of in lockstep with each other. Catherine, thank you so much. Appreciate that. Catherine Chiglinski, U.S. Finance Team Leader, Bloomberg News. Talked to us about MasterCard buying in a little bit more into that fintech space here. I think one of the interesting news items from yesterday, Scarlett, was diesel over $5 a barrel the first time in several
Do you know
years.
anyone who drives a car using diesel?
No, and I like to keep it that way. No, but I don't. I mean, now it's just gas or it's electric.
Yeah,
but all the trucks, you think about all the trucks and the farm equipment and all that kind of stuff, that's all diesel. And that's like, as somebody mentioned it today, that's the fuel of business.
That's the industrial economy,
Yes,
absolutely.
I'm waiting for the fuel surcharges to kick in for any delivery that I get.
That's a good one.
Is that going to happen?
That's a good one.
I'm sure it will. Just wait a few days or
But
weeks.
you know what's going to have a big effect is on the truckers out there. And that's going to be a big thing because they're already razor thin margins, a lot of that business. Lee Klaskow, he joins us now, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. Lee also hosts a weekly podcast, Bloomberg Intelligence Talking Transports. I actually listen to that because I consider myself a rail and truck guy. That was my first job. So
I like the way you put that. I actually listen to that.
I'm not a podcast guy.
It's good. Everybody should listen.
I'm not a
to
podcast
it.
guy, but I got a 2-hour train
He's
ride every
honest.
day. So Lee joins us here. Hey, Lee, what's this big surge in fuel costs mean for the truckers?
Paul, I appreciate your support. It means higher costs and lower margins and possibly less demand. I mean, that's really what it means. I'm sure you've seen diesel prices hit $5. We haven't seen that since September of 2022. Back in 2022, fuel accounted for about 28% of a trucker's cost. It typically hovers around 20 to 25%. So, hopefully, the prices that we're seeing now are temporary. Obviously, that all depends on what's going on in the Middle East, but it's definitely going to crimp margins and probably crimp demand just because, the longer that fuel is higher, folks out there will just have less money to spend on stuff.
What about the transition to electric vehicles for the trucking industry? Once upon a time, that was a big talking point, and it was kind of seen as, the future. Is that still the future for this industry?
It may be the future, but the future is nowhere near, especially for the over-the-road trucking companies. I mean, electric does make sense for certain applications, but those are few and far between. I think the technology has to get better. You have to remember that, trucks can only haul a certain amount of weight, and electric vehicles tend to add to a weight of a truck. So that means that's less stuff that they can haul. And then also you have the whole, the reality of some of these trucks are just going across the road, and they need to be sure that they can charge their trucks, and the costs are just so much more expensive. So it's not like a shipper's going to, I'm going to spend 50% more on rates just because you're driving an electric truck. That's just not going to happen.
So what are obviously fuel's a big issue for truckers here, but what's the demand side of the equation? What's it been over the last several months, and has it materially changed since the war in Iran began?
I mean, it's all about the consumer, really. And so, I would say demand was tepid, but it was at least growing. What you have here is the inflationary pressure from higher fuel costs, the inflationary pressure for higher food costs, coupled with the fact that I think a lot of folks were hoping that interest rates would start coming down, and that seems to be slowing as well. And therefore that impacts, end markets like housing and the automotive industry. So, we don't think that, the consumer is going to totally pull back and this is going to drive us into a recession, but definitely the consumer is going to pull back, and it is going to impact demand, and people, will have to shave off expectations for GDP the longer this conflict it goes on in the Middle East.
John Tucker mentioned two words, fuel surcharge, and I believe either FedEx or UPS at one point did tack that on for a while before removing it once oil prices came back down. Is that in our near future, Lee?
It could be. It depends on how high we go. And, a lot of other transportation companies, like trucking companies, whether it's truckload or less than truckload, and railroads, they do all have a fuel surcharge. And when fuel spikes quickly, like we've seen, the lag effect can be a drag on margins because they are paying for fuel today and then charging a surcharge from the past. In trucking, that delay or lag isn't that long. It's only a week, but for railroads, it could be 30 to 60 days. So that can impact, be a headwind for earnings going into the first and second quarter. But what I'd say, over time, it kind of plays out, because when fuel prices decline quickly, it becomes a tailwind for earnings.
All right, good stuff. Thank you so much. Lee Klaskow joining us to talk about fuel costs, especially when it comes to the freight, logistics, and shipping industry. He is our senior transport logistics and shipping analyst. Fuel surcharge will show up in so many different ways. It's just a matter of time, it feels like.
And why not? I mean, it's a direct cost. I mean, pass along, I guess, to the extent you can. I mean, we already heard the airlines saying that they're going to try to pass through, push through some of their fuel increases.
And it's showing up in their ticket prices as well. But they don't separate it as a fuel surcharge per se. They just move the price up. Dynamic pricing.
Yep, there you go.
Makes me miserable. All right, we've got a lot more coming up on Bloomberg Intelligence. We're going to be checking in with Mandeep Singh. He's our global tech research head here at Bloomberg Intelligence on the NVIDIA annual AI event. It's called GTC. Jensen Huang spoke at it yesterday, gave some bold predictions for revenue down the road. We'll discuss what it means for NVDA. Grace Lee of Columbia Threadneedle will be joining us as well. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. So we have the backdrop of higher energy and fears over stagflation. With that, the Federal Reserve officials, they started their two-day meeting today. No change to their benchmark rate is expected. We're also going to get the dots. The economic summary projections. Oil prices still elevated, but they paired some of the earlier gains. So we'll latch onto that as the reason why stock averages are higher. Brent crude is up 1.5%, 101.69. And WTI is up 1.4%, 94.83 a barrel. The Dow Jones Industrial Average up 182 points right now. That's a rise of 0.4%. 47,129 on the index. The S&P 500 up 28 points. That's up 0.4%. 67.28. The NASDAQ 100 up 141 points. And that is a rise of 0.6%. Some of the individual movers today, you have shares of Qualcomm up 2.3%. Board of Directors increasing the quarterly cash dividend and also approving a $20 billion repurchase authorization. MasterCard says it will acquire stablecoin infrastructure startup BVNK for as much as $1.8 billion. Traditional payment networks like MasterCard trying to position themselves to remain players of choice in whatever technology becomes prominent. Uber and Lyft getting a lift. They announced separate autonomous vehicle partnerships with NVIDIA. Uber is going to launch a global fleet of NVIDIA software-driven autonomous vehicles across 28 cities globally by 2020. I mean, you did this, right? When you were out in California?
What's that?
Jumped
Waymo.
in a Waymo
Yeah.
with no driver?
Yeah, somehow my son convinced me to do it.
I'd be in the
Apparently,
back
that's a tourist
cowering.
activity, by the way.
It might be. We went to In-N-Out Burger and back. How
See?
California is that?
Okay, we check the markets for you right here. Just get it delivered by drone right here on
Yes.
Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Can I get to some headlines from social media?
Yes,
from
please.
President Trump. John Tucker, thank you so much. We appreciate that. President Trump out on social media comments in a post on Truth Social. President Trump says, "I always considered NATO a one-way street. NATO will do nothing for us in time of need. Same goes for Japan, Australia, and South Korea." And the last post, "We no longer desire NATO's help on Iran." So there you go. Changing the tune yet again. So looks like the U.S., we are in it alone, I guess, as it relates to that part of the situation there. Let's get back to these markets where we do have green on the screen here. Grace Lee, Senior Portfolio Manager for Columbia Threadneedle, joins us. She's up in Boston. Grace, how are you and your cohorts at Columbia Threadneedle, your colleagues, how are you kind of positioning your portfolios, positioning your approach, given some of the geopolitical crosswinds, which have really reared their head, I guess, really over the last three and a half weeks?
Yeah, thanks for having me, Paul. I think that we're trying to be very balanced about this. It's surprising that we've had over the last 3 years, the Russell 1000 is up on average 25% a year. So in this market, given all of the geopolitical risks and potential slowdown in the job market, some of the AI related risks as well, I think we've got to at least be a little bit more cognizant of potential tail risks as well. What is the fifth standard deviation event that could cause oil prices to get to 150 or the private credit concerns to really spill over into a broader market event. So I think we're trying to be very cognizant and not lean too much one way or the other.
I'm curious what qualifies as a haven, post the start of the Iran war, because you look at how the different sectors have performed since the end of February, and on a 24 industry group basis, energy stocks make sense given the rise in oil prices. Software and services bouncing back from a pretty dismal couple of weeks. Chip makers and telecom stocks, those are the only groups that are positive so far in March. What is a haven right now?
Yeah, I think it's been a very interesting sort of barbell market. The safe havens, in fact, I think the safe havens worked so well earlier in the year that they haven't participated as much in the sort of normal safe haven trade. The consumer staples, the utilities, I do think that people will come back to them as if in fact the war drags on. I think that those are the right places to be, whether it's healthcare, consumer staples, utilities, the traditional safe haven stocks. But again, earlier in the year, I think the consumer staples sector was probably up, maybe I think that and utilities were some of the best performing sectors, for the first couple months until the war happened. And I think that the stronger dollar has also impacted, maybe some of the consumer staples, which do have multinational exposure. So they might have pulled back a little bit on that. But I do think they will serve as traditional safe havens again if the war drags on.
Grace, one of the issues prior to the Iran conflict was just the whole concept of private credit. And is there underlying credit risk there that we need to be aware of? How do you think about that concept?
Yeah, I think private credit, I don't think investors are being nuanced enough about what's going on in private credit. I think what we saw in the fall was more fraud related, and frankly, it was bank lending more so than the private credit firms. I do think what you're seeing in some of the software sector, that where private credit and private equity have been very active in terms of their investments over the last couple of years. I do think that could become a real issue. And, but then again, there's varying degrees of investment activity at different firms. And I think investors aren't willing to really do the work to look at who's going to come out a winner and possibly even stronger after the dust clears or settles here.
Good stuff. Grace Lee, thank you so much for joining us today. Grace Lee is Senior Portfolio Manager at Columbia Threadneedle, joining us from Boston. And one thing we mentioned, which is chip makers outperforming the market. They're up so far this month, not by a whole lot, but they are higher, which is outperformance, is NVIDIA. NVIDIA is holding its annual AI conference this week. Jensen Huang spoke yesterday, and he gave $1 trillion forecast.
Saw that.
And we're trying to figure out whether that is a meaningful change from what it had already kind of indicated to investors, whether it really changes, the landscape here for NVIDIA and for the chip making industry overall. Let's bring in Mandeep Singh. Mandeep is our global tech research head here at Bloomberg Intelligence. So this new forecast of $1 trillion, is it new? Does it meaningfully change what NVIDIA was already projected to do, Mandeep?
So two things here. One, every company in the tech land gives a backlog or, a forward-looking number. To me, this is NVIDIA saying we have a 3-year backlog number of $1 trillion through 2027. And the reason why I think they did that is because Broadcom in their earnings call said they expect AI revenue of $100 billion. So Broadcom's revenue run rate is around $32 billion. They said in the next 2 years, they are going to $100 billion. And who are Broadcom customers? Google, and then you have got Meta and, some of the customers of NVIDIA. So from that perspective, I think Jensen had to give a 2027 number because there is a Broadcom number out there. And when you, do the math, most likely they'll do $500 billion in revenue in 2027, NVIDIA. Next year, 2026 would be around $370 billion. 2027 would be $500 billion. So when I apply that $100 billion to $500 billion, I get to the same ratio as they are right now. I mean, AMD would be low single digit or mid single digit type of market share. So from that perspective, what Jensen is saying is, look, guys, I'm not losing market share to Broadcom or AMD. I have visibility. These hyperscalers will still make up 60% of their revenue, and this pie is big enough that all three can do well.
All right, the numbers are staggeringly big, like they always are, and I trust you that you know what you're doing on the math. What else will the smart folks at this conference be looking for? What do they need to hear from NVIDIA here?
The margins. I mean, yes, you have guided to $1 trillion in revenue, which implies around $500 billion for 2027. What are your margins going to look like? Are you going to take a slight cut in your margins? And that's where that circular financing element comes into play. If CoreWeave and Nebius are ramping up on NVIDIA, and NVIDIA is investing $2 billion in Nebius and $2 billion in CoreWeave, to me, that's sort of a margin offset. Yes, you're saying you have mid 70% gross margin, but then you're investing $2 billion in the company that's buying your chips. So from that perspective, I think NVIDIA cares about maintaining the margins, but these sort of investments are an offset to me in terms of, maintaining your margins.
Right, maintaining margins being primary goal number one here, primary concern here for NVIDIA. We also learned from GTC that NVIDIA is developing chips for data centers in outer space. Is this something that's going to add to revenue in a meaningful way anytime soon?
And probably Elon Musk knows the answer to this question, because he has been the most vocal about, setting up data centers in space. But to my mind, given how much cooling and, the cluster size of these AI data centers, you just yes, cooling is an advantage in space, but you can't set up a cluster of, 100,000 GPUs when one of the chips can fail. How do you replace that? And I think a lot of the other folks in the industry have called that point out, that you can't set up big clusters in space. Even if you can have a chip for space, AI needs large amounts of processing, big clusters of chips. You can't do that in space.
30 seconds left. I'm seeing that NVIDIA stock up 50% on a trailing 12-month basis, but basically flat year to date. What's the current story if I'm a stock jockey on NVIDIA?
I mean, I think there is still a lot of skepticism around NVIDIA being able to reach that level, even though I think if Jensen is guiding, I would believe him. He has visibility, and these growth rates are staggering. But with semis companies, you always have to think about when is that digestion period going to come, and what does that mean for EPS? And we will see an EPS decline when that digestion period comes.
It's funny, I didn't even think of NVIDIA as a chip company. It's an AI company, but no, really.
It is a chip company, yes.
And that's a cyclical business, I've been told.
Yes. Well, it used to be.
Yeah, I guess you're right. It used to be. I don't know. Mandeep Singh, Global Tech Research Head, Bloomberg Intelligence. He was born on third base, folks. He became a tech analyst when this whole internet thing started, and then AI. I mean, I could have been successful.
Now he's our Global Tech Research Head.
Yeah, he does it all, so we appreciate that. S&P up 24 points, the Dow up 140 points. This is Bloomberg.